Today I will be presenting a brief audio report on Praj Industries. By the end of this video, you will get to know 5 insights which you did not know earlier on this company. Praj Industries provides solution for various grades of ethanol, including beverage, fuel, industrial pharma, and perfumery and brewery plants. Insight number 1, market share. Coming to market share, Praj Industries has 66.67% market share in ethanol plant installation. Insight number 2, revenue mix. Coming to the revenue mix, 75% of the sales comes from bioenergy, 19% from engineering business, and 6% from high purity. Insight number 3, location-wise breakup. The company sales are concentrated in the following countries. 83% of the sales comes from India and 17% from rest of the world. Insight number 4, order book breakup. Coming to the order book breakup, 87% of the sales comes from the domestic market and 13% from exports. Hence, the company is heavily dependent on India for securing most of its revenue. Insight number 5, sales growth and profit growth. The company has a great track record of sales growth and profit growth during the last 5 years. From a turnover of just 917 crores in the year 2018, the sales has jumped to rupees 2,333 crores in the year 2022, and from a net profit of just 39.49 crores in the year 2018, the company's net profit has zoomed to rupees 150.24 crores in the year 2022. ROE and free cash flow. The company has a steady and improving ROE. From an ROE of just 5.53% in the year 2018, the company's ROE has jumped to 17.54% in the year 2022. An ROE of above 15 clearly indicates that the company is using shareholders' funds effectively and generating a good return on investment. Also, the company has an improving free cash flow in the last 5 years. This signifies that the company has surplus cash from the business, which can be used for internal growth or expansion of the company. Debt and pledged. The company has zero pledge. This signifies that in a bear market, there will be no panic selling by both FIIs and DIs. Also, with a zero debt policy, the company does not have to pay interest on loans either to banks or financial institutions. This is a great sign for the company. 5-year market return. With a 5-year positive return of 248.09%, the company has significantly outperformed the Sensex, which gave returns of just 91.48%. Also, it has got an amazing 10-year positive return of 697.91% compared to the Sensex, which gave just 225.07%. If I were a long-term investor, I would definitely keep the stock in my watchlist radar. For getting more such research insights and in-depth stock analysis, please join our Stocks Made Easy group. Thanking you from team testmystock.com.